Hello, everyone. My name is Dominique, and I have the Greenleaf team here with us today. And today we'll be discussing the Westpark Center located in the Columbia metro area. First and foremost, we always like to kick off these calls with our mission here at Greenleaf Connect. Really, our goal is to be direct, informative, and really provide transparency across all of our communication and audience members here at Greenleaf. Specifically, we conduct private Connect events, which are more interactive, and live streams, which are open to the public. All right, without further ado, I will ask David to turn on his video and we will get started. Thanks, everyone.
Thank you, Dominique. Really appreciate you giving us such an introduction and appreciate everyone being on to join us for this live stream. Really excited about the Westpark Center, really excited about the new tenant we're dealing with, the Secret Service, which is of course guaranteed by the General Services Administration, the GSA, the federal government, which is the holy grail of government leases. So we'll jump right into the details of the property. As you can see, it's located in Columbia, South Carolina, which is a new market for us, but a market that we're being pretty aggressive in. We had a couple properties under contract there last year that didn't work out for various reasons, not related to deal quality. So we've become quite familiar with the market. Our acquisition managers have spent a lot of time in Columbia developing those relationships. So excited to put this one into play. And I believe we actually have another one or two behind them that are in the works. So very happy with the statistics in this market, the low vacancy market. The properties, the supply is limited, which keeps some of the bigger institutional buyers out, but our proximity to Columbia has really helped us establish a foothold, being only 3 hours away from Atlanta and really in the center of all the strong growth cities in the Southeast that everyone hears about. The contract price here is $7.25 million with a price per square foot of $145. It's a nearly 50,000 square foot building, which is a nice size. It's right in our wheelhouse with what we like to see on the office side. Our minimum is about 10,000 square feet, and we'll do anywhere up to 100,000 square feet and even higher. But this is a nice building size similar to others that we've done and seen. As you can see, we're purchasing this property at a very strong cap rate of 8.3%, which is a little above the comparables for Columbia, which we'll see later, but right in line and actually at a slight discount for when you're getting the federal credit tenants like the GSA Secret Service. And we have nice upside built into this deal that we see this deal going to a 9.5% cap rate once we exit it at the end of our 4-year projection. The property is built in 2001, so a fairly new build, especially compared to many of the buildings that we see in Columbia and across the Southeast that are really those vintage 1980s buildings. So getting a building built after 2000 is fairly new in our space, and the building's been really well maintained. So that's going to limit the overall maintenance that we project through the whole period of this building. As you can see, the weighted average lease term is 4.5 years, and there are only 5 tenants, which again is a big advantage in terms of managing the property. Many of these properties that are 50,000 square feet will have 15, 20 tenants, which obviously adds to the cost, adds to any tenant improvement or leasing costs that you need to project into the property should there be tenant turnover. But we don't project a lot of that turnover here, which makes this a very nice, stable cash flowing deal for us from day one. And as you can see, we're actually targeting a hold period of 4 years rather than our normal 5. And we'll get into that a little further. It's really based on the renewal of the Secret Service lease that we're anticipating, along with the brand new lease term for Helena. So as you can see, there are 3 main tenants that we highlighted here. Really, the 2 on the left side are our primary targets. So of course, the Secret Service not only is the strongest of the leases, as with any government lease, and it's also the largest lease. So they occupy nearly 23,000 square feet of this property. They came in 2014, so they have a nice established occupancy of 8 years, and their lease is coming due in 2 years. But one of the interesting factors that we've discovered is the average tenancy of a GSA federal lease is 23 years. So while they're nicely established, this actually has the makings of a longer term lease, and it would be highly unusual for them to come into a place and only stay for 10 years. When we target government leases, one of the things we look for in our strategy is who are the other tenants, because often the single tenant buildings are going to be out of our pricing range. There are big government groups that will pay huge premiums for those. And the second tenant here is Helena Agricultural, who are a company of over 6,000 employees, national agricultural company. And they have just moved into their brand newly built out 16,000 square foot space. They put $55 a square foot into a brand new, beautiful build out that I've seen myself, and signed what's a pretty long-term lease in the office market these days of 10 years. So really excited to have them as those co-tenants that are holding down the property as the two main tenants. And then you could see Walgreens as another tenant here. There's also United Healthcare. So it's always good when you have those smaller tenants, even though they're not the main consideration that we make. But of course, anytime you have large credit tenants, it just shows that you're not going to have to worry about getting your rent paid and all that. So that's one of the things we really like about the property, is just the credit tenancy. So we can really project a high cash flow from day one. So as we touched upon, Columbia is a new market for us, but one that we're quite well versed in. And you can see some of the highlights in the market that people really overlook when they think of the general region of South Carolina, of the Southeast. You can see the Secret Service building is called out here, and it's near FBI facility. So this area has a long history of government tenancy. In particular, it's right next to the interstate, the I-26, which is the main north-south artery running out of Columbia towards Greenville, and the 85 corridor that we generally operate in. And in addition to the location next to the 26, you can see there's an intersection, if you look closely, of the 26 and the 20, that the 20 is the route that runs east-west from Atlanta all the way towards the East Coast. So really strong area. Obviously, the Secret Service has a concern of wanting to be able to be in different areas, as this is their main field office for the region. So they love that access, as do most government tenants. And you could see some of the other highlights. The University of South Carolina is based here. Fort Jackson, which is one of the largest, I believe the largest Army training facility in the country, if I'm not mistaken, but I have to double check that. But definitely one of the largest military facilities, has had a historical presence here. And of course, Columbia is actually the state capital of South Carolina, which always draws in more government tenants anytime it's a state capital. So as you can see on your screens, we have the sales comparables, which is a big key metric for us when we are evaluating a property. This property is being purchased at $145 a square foot. And we have two considerations when it comes to government tenanted properties as we look at the comparables of dollar per square foot. On the one hand, we want to establish the area comps that were in line with those, but government tenants tend to trend even higher than the general area. So this deal is really a home run on the comparables, because as you can see, it comps well both with the local area tenants as well as other Secret Service properties that have been sold. At $145 a square foot, you could see it's right between the first two buildings that are very similar buildings in Columbia, similar square footage, similar years built. Both of them do not have any government or medical, so they're just general office. And even with that, without the added premium of government that we have in our property, we're still right in the middle of that range. And I would even say that the comparable 700 Huger is much more comparable in terms of the pricing, because as many people are aware, there's a huge pricing run up just in those 6 months between February to August. So buying this one for $145 already in 2022 is significantly less than those comparables. And it's significantly less than the other Secret Service buildings that we can see trending even as high as $300 a square foot, because of the premium that buyers will put on this tenant. In addition to the sales comparables, we have our lease comparables. And we can see here that our property that we're purchasing, the Secret Service building on West Park Boulevard, is actually the lowest of all these comparables. They're all recently signed comparables, and some of them do have government in them. Government actually tends to trend lower in terms of the lease term. But what this demonstrates is we are able to project regular rental increases to keep up with inflation and keep up with rising rents as time goes on. This is not a property that's highly dependent on rental rate increases to be successful, but we always want to be in a position where we're comfortable with those ongoing increases that are either built into the lease, or we will negotiate when the property comes up for renewal in terms of the tenancy. Here we have our investment overview, and we'd love to run through the general details of the property. So our contract price is $7.25 million. We have capital improvements scheduled at $400,000. And this is a building that's been really well maintained. It's been owned the last 2-3 years by a professional real estate group. So that really helped in the sense that they did a lot of the work that was outstanding when they took over the building. And our projections for these capital improvements were pretty close to what they ended up being upon inspection. We didn't even need to request any credit because we had already modeled those in originally. And we're very happy to see that the numbers matched up pretty well. And once we add in the capital improvements and the closing costs and reserves, we see the total deal cost is slightly over $8.2 million. Of that will be financing with our 70-30 split. So you can see the debt and the equity, how they break up of the total capital stack. As a standard in all our government deals, we are offering a preferred return of 7% with an investor profit share of 70%, and the Greenleaf profit share being 30%, and our standard acquisition fee of 2%. Moving to the other side of the slide, we have our projected returns. We're very excited about the returns on this property. We're projecting an annual cash on cash and investment return of 12.5% already in year one, which is a great return because that will allow us to pay full prefs right off the bat, which of course we know is a high priority for investors to be getting cash coming in immediately off the investment. And we could see not only is there this strong, stable base of cash flow, but we have the deal going up to a total investment return of 17% by year 4, and that's without even projecting in our sales. So we have some nice increases built in terms of reimbursements that will keep that number going up, as well as the projected renewal of the Secret Service lease. So we can see on this chart our cash flows that we project for the whole year, for all the years of the whole period. And one of the things that Dominique asked me to point out, because I know a number of investors have inquired about this, we could see circled in terms of the cash flows per 100,000 and below it, that our investment return in terms of cash on cash is actually going to be highest in year 1. And while a few of the investors have inquired as to why that number would be going down, we actually view this as a big victory, because in a standard deal, we would expect that 12.5% cash on cash return to be lower and then go up to year 4, which is 11.1%. And that would fit our metrics. We actually established a new banking relationship, and they're giving us a 12-month interest only payment for the first year of the financing term. So that's a nice opportunity where actually we can add more cash in up front than what would normally be paid out to investors. So really excited about being able to give our investors more money back right off the bat. Continuing down, you can see our total deal level IRR that we project is 21.7%. And that's based on our exit sensitivity table below, that we're projecting an eventual sale of 7.75%. And of course, we try and be conservative on these numbers. My hope is that, of course, it'll trend closer to the 7.25 number, which would only increase the returns that we see. But even if we do end up trading it at a 7.75% cap rate at the end of the hold period, we're quite happy with the projected numbers on this investment.
Thank you, David. Do you have any last minute remarks that you would like to share with us regarding the West Park opportunity?
Well, as we said, we're very excited. We're fully allocated and looking forward to having all the investors on board. I know we have some new investors that were excited by this property. And again, to add the Secret Service into our portfolio is a big win for our government team and a big win for Greenleaf as a whole. So really excited about the stability of that tenant, especially in the long term.
Wonderful. Well, thank you so much, David, for sharing these West Park insights with us. Before this does conclude our regularly scheduled program, before we sign off and enter our Q&A portion of this broadcast, we do want to leave you with some upcoming dates. So for our committed investors, we will be sure to share the subscription agreement. And I know I'm glitching here, folks. I ask for you to bear with us. We will be sharing that subscription agreement with you by the end of February. And we ask for those to be executed along with funds to be due on March 15th, all to prepare, excuse me, for a latest closing of March 29th. And I do apologize again for that glitch. I know we're almost done. We did cover Henderson Mill last week. And of course, we did the Westpark Center this week. We do have a couple of upcoming deals that we are excited to present to you. So be sure to check your email for all of our investment opportunities in the next month or so. All right, without further ado, I will ask Natalie to conduct our Q&A portion of this broadcast.
Thank you, Dominique, and thank you to everyone who submitted questions today. We also want to remind you that you can continue to use the Q&A feature at the bottom of your screen to submit questions as we work through those that have come in so far. You ready, David?
Always, Natalie.
Okay, so first, can you clarify the size of the building for us again?
Yes, there seemed to be some confusion of a possible typo in one of the OM versions that's sent out. So this property, as presented in the slides, is accurate. It's just under 50,000 square feet, which again fits in well with what we like to target. So it is indeed 49,000 and change, just under 50,000 square feet.
Thank you for that clarification. And our next question, this project states that it ends in year 4. And you mentioned this a little earlier, but just to clarify for us again, why does this differ from others that have been ending in year 5?
So in general, we project 5-year holds across all of our properties, but of course, we want to be realistic in when the timing will likely be as advantageous as possible for an exit. So in the case of any property, the price is highly tied to lease term. And here we have the Secret Service lease that's ending in 2024. And once we renew that lease, which we're very confident in the eventual renewal, both based on the tenant interviews we've conducted and the general way the GSA operates, once we have that new lease in place, that's going to be our highest opportunity to exit the property, along with the fact that Helena, the other credit tenant, the second largest tenant, is on a 10-year lease that started this year. So once the Secret Service lease is signed up, they'll be at the peak of their lease. And as we projected, unless something unexpected would happen, Helena will be, with about 6 years left on their lease, and any holding of the property would just bleed off the value from that point. So our goal will be to get that new Secret Service lease, and we project it likely to sell at that point.
That makes sense. Now, does this year 4 hold mean that there's a guaranteed sale of the asset or payout to investors after year 4?
So we never guarantee a sale. We do our best to project out where we see it going. Obviously, we stay in tune with the markets and want to do it in the most advantageous way for our investors. So anything could change on the property. We don't guarantee that we're going to sell it at that point. There's all sorts of things that could happen. We could get new tenants coming in with longer terms. We could have Helena want to reach out to us for some sort of extension. So we evaluate market conditions as we go and really try and stay flexible off of that projection.
Can you review what's in the other income amount for the operating statement, since this is such a large amount?
Yes, I know a few of the investors asked about this question. So often in these type of full service leases, there will be reimbursements towards the maintenance and operation of the property. Now, different tenants prefer to have it broken out in a different way. So some of them prefer to put it all in the base rent and not have any reimbursements. In this case, the way the leases are structured, these are reimbursements that the Secret Service and Helena are both providing, which make up most of the reimbursements towards our operating costs and maintenance of the property. Those are all guaranteed in the lease with yearly increases to cover for inflation and all of those types of things. So while it's listed as other income, it's not listed as part of the base rent, but it is guaranteed in the lease. And that's just the way they prefer to structure it.
Okay. What operations does Walgreens have here?
Walgreens uses this facility as a training center for their new employees. It's set up really as classrooms, as podiums, as break rooms. They're not running office operations out of here, but they do have different regional training centers, and they use it on an as-needed basis. The usage of this property for this tenant was not a large concern for us. It was more that, hey, we have another credit tenant who's going to pay their lease. And obviously their usage could fluctuate. If they wanted to leave, the leasing market is so strong there. And we could see that it's at market rates. We could see that it's a tight leasing market. So we weren't particularly concerned with whether they're going to renew the lease as we would be with the Secret Service as an example.
Do have a follow-up Walgreens question. So does Walgreens have similar operations in the same region where they could consolidate and possibly not release? We know the new CEO is pro about cost cutting and savings.
It wasn't something that we researched in terms of whether they have comparable facilities. We do know they have different facilities in different cities. It's the type of space that's not a high build out space. It is very easy for them to say, hey, listen, we want to move if there would be a better opportunity. But again, it's a smaller square footage footprint. So we view them as almost an interchangeable tenant that we like having Walgreens in there, but it's not really adding significant value to the property. So we'll evaluate that as their lease term comes up. And if that is something they want to do, we're very confident in being able to get another strong tenant in there, even possibly at a higher lease rate.
Great. Now, can you review the lease terms with us again, just the main lease terms?
Yeah, the Secret Service expires in 2024. They have been here as part of a 10-year lease that they signed in 2014. The property calls for flat rent, but it does have increases in their lease for reimbursements. So we have, while the base rent is flat, we actually have rising rent rates when you factor in the reimbursements. So we're not just sitting with flat rent for the next couple of years. Their rent went up after year 5, which is very common in GSA tenants, that they won't increase it yearly, but they'll have some increase built in. So we know they were comfortable to pay what's a higher rate for them compared to what it originally was. And Helena came in on a new 10-year lease that they're also paying flat rent, but the same type of reimbursements built in. So in essence, you get those increases in overall NOI as the rent rates go up. They have a 10-year firm term lease, brand new, just starting. And again, they're a high build out tenant, which we really like, because anytime a tenant's going to come in and build to their specifications, it makes it that much harder for them to go to a competing property.
Okay. Still on leases, do the leases have terms to mitigate inflation risk? For instance, are the rent escalation clauses fixed or CPI based? And are the expense terms actual expenses or preset?
So we touched on this a little bit. The expenses are set in the lease rates. So they're getting 2.5% yearly increases. It doesn't fluctuate according to CPI, which we've seen in some leases, but it's actually easier for us to project that out. And CPI usually bounces, if you average it out over the years, between 2 to 3%. So it's a nice rate for us. If we saw reimbursements at 1%, we might be concerned of falling behind that. Or if we saw reimbursements at 5%, which I've actually never seen, we would be concerned that they would come to us and say, we don't want to pay this anymore. But the increases that we're seeing will do a nice job keeping pace with where we see leasing rates going.
Now, have you spoken with the Secret Service or GSA about their intentions to renew their lease or even expand? And if not, do you have other reasons for confidence that this will happen?
Yes, I myself spoke with the regional head of the GSA based in Atlanta. And when I say regional head, she handles the entire Columbia region in terms of leasing for the federal government. So what we spoke about is they do not have any specific plans in place right now, whether to stay or leave, which is common for the government. They're still a little over 2 years out, and 2 years is when they begin to consider whether they want to stay, whether what they want to go, whether they want to expand, whether they want specifications built into their property. Now, what we love in terms of the renewal is we value high build out tenants when it comes to the government. So medical, we have 4 VA centers that we like. We have security, law enforcement tenants like Secret Service that we target because they have to build in so much specification to their space that it really makes it very difficult for them, both logistically and in terms of the cost that another property would have to incur to build out to the specifications that have already been put into this property. So the average GSA tenancy that I believe I mentioned earlier is 23 and a half years. So the government does not like to move on a regular basis, all the more so for properties that have already been built out where they need. Across the board, when I talk to government tenants, they say to me, hey, listen, it's not up to us, but we never want to leave. They like where they are. They like that they're hiring people. People are moving to the area based on where they live. The last thing they want to do is move, which they'll do in advantageous situations to them, but their overall retention rate is 90%. So when we find these type of tenants, unless there's something specifically wrong, we're very confident in their ongoing tenancy. Of course, validating that the rates are in line and there's no other outside factors that would make us concerned about a renewal.
So
But I
overall,
will
pretty
add,
good news for us.
I will add the GSA rep that I spoke to said she just took over this market a few months ago, and often on properties they'll have a list of complaints, a list of things they need to fix. And she said with this property specifically, there was no complaints, there was nothing to fix. So that tells her that they're pretty happy with the property.
More good news. So is the FBI building down the street fully occupied?
The FBI building is occupied. Now, the FBI building down the street is interesting because there are stories for the last 6 years in Columbia that the FBI is actually building a new facility in the next county over in Lexington. So while this property is fully occupied, it's been known for the last 3-4 years that whenever that building is done, this FBI building will be vacating and moving to that new facility. Now, one of the reasons that we like having the FBI there, it's not specifically because the FBI and the Secret Service work together, but what it does do, even with them vacating now, is it validates that it's an area that the government tenants want to be. The FBI is not vacating because of any issue with their property. It's simply they need more space. They have 8 field offices around Columbia. And their goal has always been to consolidate all of those in terms of convenience, in terms of having all their labs there, their garages for the cars. So one of the reasons we see government facilities vacate, and we've seen this with certain VA clinics, is when they can build their crown jewel exactly how they want, which again is not necessarily an indictment of their current facility. It's more that the growing agencies have outgrown their space. And we don't have that concern here because the Secret Service is not usually a large footprint tenant. They're a smaller agency than the FBI, as well as if they really wanted more space, they would always rather expand than build because of the issues with building a new facility for themselves. They don't have the footprint to build anyway, but of course we could always offer them expanded space should they require that.
Now let's talk about the loan. Can you tell us about the loan terms, either definite or estimated terms?
Yes, we actually established a new banking relationship that we were able to finance both the Henderson Mill opportunity that we spoke about last week, along with this Westpark facility together. And we're getting a rate of 3.75% on a 5-year term with a 25-year amortization, which is standard for what we look for. And we are getting 12 months interest only upfront, which is nice, and adding some cash flow upfront, as we talked about earlier. So right in line with what we expect to see in terms of government tenants, and definitely lower than what we would see on general office.
Now, have you considered a longer loan term to lock in today's rate?
So the loan terms are really tied to where the leases are. And here we have the shorter term lease of the Secret Service. So all the banks that I've had experience with will want to sign on for an initial term that's closer to the remaining lease term. If we had a property that had 20 years left on it, I'm sure they would entertain such a thing. But we're happy with that initial 5-year term, and it also fits our hold period. So of course, if we wanted to hold it longer, we could refinance or see what our options are at that point. But we're confident in not really needing that longer term lease, especially given the, again, short lease term and the projected hold period.
Gotcha. Another FBI building question came through. Why wouldn't the Secret Service move into the vacated FBI building?
The vacated FBI building is over 50,000 square feet, which wouldn't fit the footprint of the Secret Service that has 22,000 square feet. 22,000 square feet is right where we've seen other Secret Service facilities, because they just don't have the manpower that would require that space. They don't need their own labs. They don't need all the build out that the FBI building would have. Furthermore, for them to move into that property, even though it really is not a good fit for them, they would really have to match up the timelines very well. And the FBI building is actually waiting on construction. It's already been delayed 3 or 4 years in their new Lexington facility. So it would really have to be a perfect storm, besides the fact that the Secret Service does not really have their own buildings. We've seen, even with the comparables that we posted, they usually like to be in buildings that they're part of a facility, but they're not usually standalone locations. Whereas the FBI, we've seen other buildings they've custom built, and it fits their profile a lot better because of the manpower that they require and the growing size of the agency.
Great. Well, those are all the questions we have for you today. Again, we want to thank everyone for participating. And of course, we want to thank you, David, for sharing the details of our new Westpark Center deal. As we wrap this up, we'll pitch it back over to Dominique to close with our upcoming dates.
Yes, thank you, Natalie. Again, this does conclude our Q&A portion of this broadcast. Again, for those committed investors, you can expect an email of your subscription package by the end of the month, all to prepare for closing by the end of March. Well, we do appreciate you joining today. We are going to stay online for a couple moments or so, just for any last minute questions. But in the meantime, thank you so much for joining. This recording will be made available by the end of the week this week, and we hope to see you in our upcoming live streams. Thanks again and have a great day. Exciting, David.
Always excited. Anything we put forward is exciting. I always tell the investors, if only they knew what it takes to get a deal through our committees, they would know how exciting it is when we finally get to the point that we're proceeding. But of course, that's the way it needs to be, because anything we would present to investors has to have gone through so much checking and such a thorough process that we're comfortable to do that.
So David, we had one last minute question come through.
Yeah,
so help us out with the worst case scenario. Let's say the Secret Service doesn't renew, and roughly the same time we have a balloon payment on our loan. What happens then?
Well, in the unlikely event the Secret Service wouldn't renew, our loan wouldn't be changing in the rates for 5 years till 2027. And the Secret Service is expiring on their tenancy in 2024. So first of all, the Secret Service has to give notice if they're going to vacate. So it wouldn't be like a sudden last minute crunch that all of a sudden we have to figure out what we're doing. The vacancy rates in Columbia are around 7 or 8%. And that's a very low figure, especially for a building like ours, which is better maintained and of a newer construction variety. We could see just from the Helena lease coming in that there's a big demand for this type of space and this amount of space. 20,000 square feet is not, 100,000 square foot building that you have to fill, that the tenancy would be limited. So in a worst case scenario, which we do not project or anticipate, our plan would be to release the space, likely at higher rates, because general office, even from a credit tenant, will lease for higher than a government tenant. So we would get that bump in NOI that would come with it and get a credit tenant in there on a longer term lease, which would hopefully make up the difference between what the projections would be. And, again, as unlikely as it is, we've had scenarios where things didn't go according to plan and we got more rental rate than we thought we would, and we got more term than we thought we would, and the numbers would end up equalizing, because we're basically trying to focus on the spread and the additional value you get from a government property. But even in our exit cap rate projection, we're very conservative. We're projecting 7.75. And the general market for this property, if it was just general office, is probably somewhere around 8.5 or 8.75, to be quite honest, in Columbia. So were we to replace the tenant, even if it knocked us down to, let's say, an 8.5% cap rate exit, but we could probably add $3 a square foot in rental rate, which I would have to run the numbers, but likely that additional the $3 per square foot would start to make up the difference in NOI, which would be reflected in the eventual exit. If that makes sense, just envisioning a unusual scenario.
Well, thank you, David. We appreciate that.
All right, folks, we're going to log off here. If you have any additional questions, please feel free to email us at invest@greenleafmgmt.com, and we'll be sure to answer those. Thanks again, and have a great rest of your day. Bye-bye.